Aditya Welekar, who's the Senior Research Analyst, Metals at Axis Securities, joins us right now on the show. Aditya, good having you. Thank you so much for taking the time out. This is Neeraj here. Good morning. How do you view the strength in metals currently? What factors align to it, and is this sustainable?
Yeah, good morning, Neeraj. So thanks for having me on the show. So basically, the strength which we are seeing in the steel names. So if I want to put it succinctly, then in Q1 of this fiscal, we expect good set of numbers from the steel names. So there might be some margin improvement. This is because of the safeguard duty is kind of supporting the HRC prices, and then your coking coal prices are also down. So that will lead to some margin expansion, which will flow into the numbers in Q1. And that is why the valuation gap which was there, that is kind of bridging out. So that's why we have seen the rally. Then there are a number of macroeconomic and sector specific news. So one important news is that there are some indications that the Chinese authorities will curb on the steel production in China to an extent of almost 2% for calendar year 26. So that is kind of a supportive, and we have seen in the first 3 months, first 4 months, that Chinese steel production is down by 1.6%. Usually, I don't take these news flow coming out from China very seriously, but this time around, the geopolitical situation looks slightly difficult for China, because the kind of exports which China is putting out in the rest of the world, which is almost 10 million tons per month, it looks unsustainable. Because the reason for that, there is, as you know, there is tariff impact from US. Then there are anti-dumping duties and trade restrictions coming from many countries like Vietnam, like South Korea. India has also now a safeguard duty. So it will be difficult for China to continue with that kind of momentum of the steel exports which they are currently doing. So the option is to for them is to cut the steel production, and that will somehow protect the decline in the steel HRC prices. So I will halt here, and so that's the outlook on steel.
So, okay, so let's wrap up steel first. Do you reckon, therefore, that if that is your base case view, and therefore if these come up, then would there be an impact on steel prices? Because Aditya, I thought that yes, global prices would have an impact, but Indian steel prices are probably insulated largely from what's happening around the world, and therefore would the steel companies' numbers be largely independent of what's happening in China, or do you think that the prices will come off?
So now, if you see, there is the safeguard duty will go on for 200 days. So the government will have to take the decision whether to further extend the safeguard duty post November, when the safeguard duty means the provisional safeguard duty stops. Then they will have to take a decision. So that decision will be dependent on how the Chinese HRC prices move. Currently, the prices are going down because the reason we all know that the excess production China is doing. So as if China acts on what they are saying, and for each month they cut their production, then there might be some stability to HRC prices, and we can continue with the same safeguard duty, or the government may decide on future. That will be a speculative from my part, but overall, uh, if the Chinese authorities go ahead and they cut the production, which what they are saying, then the steel prices may find some support. And also, one factor is that coking coal prices are trading at a lower level of 180 to $190 per ton, which is kind of keeping the spreads maintained for the steel players. But the kind of valuation gap which has emerged, which is now getting breached, as I said, for Q1 numbers. So post that, on the base of Q1, the further rally for the steel stocks will totally depend upon the HRC prices rising from these levels, and the stock specific triggers, like a specific company may have some specific triggers like expansion picking up or anything like that. So as far as the stock trajectory is concerned, we are seeing the valuation gap getting bridged. The valuation are now getting to their one standard deviation above. They are now trading above that one standard deviation above their
Got it.
long-term average. And post further rally from these levels definitely depends upon uptick for steel prices globally, and that is very difficult to predict as of
Sure,
now.
sure. Okay. So, Aditya, what is your pecking order? Steel also include the non-ferrous ones. And when you give your pecking order, also tell us if you have coverage on Vedanta, because that's the stock in news, right? That the dates have been going ahead. But the bulls on the stock argue, I don't know if you have coverage there or not, but I'm just putting it out nevertheless, that the bulls on the stock argue that independent of what happens in the interim, if there is this whole value unlocking that is to happen, then Vedanta becomes a good stock to invest in, to play tactically, that is. So your pecking order and a view on Vedanta.
Yeah, sure. So in steel names, definitely Tata Steel still have some value from even from these levels. SAIL, we see that the valuation is now almost full. We see value in Jindal Steel and Power. JSW Steel, the valuation also appears slightly full. So in the pecking order, Tata Steel followed by Jindal Steel and Power. In non-ferrous, aluminium prices and copper prices as well as zinc prices, they have withstood very well within this volatile tariff escalation phase. And aluminium prices, on the contrary, have increased. So also as copper prices. This is because of the fall in the inventories at London Metal Exchange, which are driven by several reasons. So one of the reason is that many of these metal stocks, they are moving to US to fill up the arbitrage which is arising because of the tariffs in US. China is also consuming a lot of Russian metal, so the Russian metal is not flowing to London Metal Exchange. So because of these reasons, the inventory at the London Metal Exchange has come down, and that has supported all these non-ferrous metals. So that is number one. Now coming to Vedanta, Vedanta is beneficiary of aluminium LME prices. It is beneficiary of the strength in silver prices because it has a Hindustan zinc in it. And then oil prices have rose to some extent, in last few sessions, but they have now cooled down. But it will also help Vedanta. So, and the demerger is definitely one trigger which Vedanta will have. The next hearing, I guess, is on 20th of August. So that is one key point which we have to see. But the stock may consolidate at these levels, but definitely the stock has a good fundamentals. There are the triggers of demerger. Then they are expanding their aluminium downstream as well as upstream business. So they will be their backward integration for aluminium smelters. For alumina, they currently they are only 40% integrated, but that will increase once their CG Mali mine and bauxite mine comes up, and their Gograpalli coal mine. So all these backward integration projects, and then their power unit at Vedanta, these will help Vedanta. So I don't see any reason for us to panic with these near-term volatile news. And investors who are long in Vedanta, they can stay long in Vedanta. So that is
Got
our
it.
view.
Got it. Aditya, great talking to you today. Thank you so much for giving us a lowdown on what is arguably one of the hottest sectors right now in such a volatile environment. Really appreciate your time.
Thank you.